Welcome. Hopefully you enjoyed the last video where we discussed a pullback strategy on the UVXY. So here's to another trading strategy that you can use. Have a great evening.
Hi, welcome to the live trade strategy review. First, take a moment to look over this risk disclosure statement. Just as a reminder, this information is educational purpose only, and trading does involve risk of loss. All right, the strategy we're going to review is an option trade that we took in the live trading room on the big expectations of Amazon. So let's take a look at what we're looking here first from a technical perspective to get an idea of market direction or condition. First and foremost, Amazon's been in a strong uptrend. The momentum indicator, positive. The relative strength, this is the person's market catcher indicator. It's a relative strength indicator. It gives us the knowledge that this particular instrument or stock, Amazon, on a weekly basis, you can see this is a weekly stock chart on Amazon, is outperforming the broad market, meaning its relative strength is outperforming the market. This is my proprietary volume indicator. As you can see, very strong reading. It's straight up and all components are firing off bullish signs. Green, it's above the zero line indicator. The moving averages are pointing up. It's just a tremendously strong market. What we're looking for in targeting for this week was 950 level. I want to introduce you to my weekly thoughts and observations. As you can see, this was last modified. It was created on 4/21, and it was last modified, meaning it went out Sunday on April 23rd. What did it say? Well, basically, just to cut to the chase, a few things. We looked at Amazon, we looked at Facebook, but here's what we really wanted to focus on. We were focusing on, just quite frankly, to look at Amazon here, trading up near the 950 handle, Amazon. So we were talking about looking for a move near person's pivot resistance and that red box, and looking for earnings to maybe propel this stock up into that area. So from a seasonal perspective, the market goes up, the volume looking great, so it was ready to launch. So what's the right strategy to trade this once we get down into a trade idea? So that's what we're going to go over right now. But before we do, let me just reiterate, Amazon, we were looking for prices to peak out near the 950 level. So that's the moral of the story. If that's our target, we've done our analytics. We've got tools that help us to derive what the condition of a market is. Now let's go into the options and look for a strategy. Real simple. Let's take a look. If you understand options, then you'll be with me, at least follow me here with Thinkorswim. If you look at your far right corner, you will see that it has a list of numbers. This is implied volatility. April, the expiration, day before expiration, earnings come out. You'll notice 78% and then 39%. So we also have another little tool here. We can look at the option statistics. The 52-week high on options is 42, and we're dealing with an option that has an implied volatility of 78. You can look at the 52-week historic volatility is at 42, and again, we're dealing with an option that its implied volatility is almost double. What does that mean? The options here, because of the demand, are very expensive. So how do we go around a trade that knowing options are going to be overly priced in that environment? Well, here's what we came up with. All right, before we give you the exact strategy, let me just share with you. If we're targeting 950, buying a 950 option, which is going to cost between $700, or if you buy it without working an order, the bid is $700, the ask is $750. For one option, that's going to cost $750. It's a lot of money. We would need to break even $950, $750. $7.50 added to $950 would be our break even. So, I mean, we're really going to need the market to push from a high of 918 all the way up after it's already moved. We're talking about potentially the market going maybe, you know, somewhere just slightly north of between 940 and not in that zone, 940 to 955. So what's the best strategy? These options are darn expensive. So what we came up with was an out-of-the-money call butterfly. Basically strategy, we're buying the 940 calls, selling the 950, selling the 960, but it's kind of in a ratio. If you're not familiar with this strategy, you'll notice you are long the 940, you're short 2 of the 950s. We'll get into that in a second. And then you're long 1 of the 960. This reduces your cost to around the midpoint of the bid and ask was 88. Trade's done for $1.50. So let's take a look at what the parameters of this trade really does. Using Thinkorswim, if you simply right-click on the strategy and go to Analyze Trade, we can come up right now with the strategy and the different ones that we can explore. Right now, we're interested in one strategy on Amazon. So as you can see, we're looking at several as we've gone through the day. So what we're looking for is the one strategy butterfly, the 940, 50, 60 for 88 cents up to $1.50. So as you can see, what it is our max risk is right now at what we pay for the strategy. But where's our profit? If the stock goes anywhere from 940, our maximum profit would be close to $800 and almost $50 on that strategy, as you can see here, all the way up to about exactly 950. We don't lose money until it gets back down under 959. So we have a little margin of error between 940 and 960 with a max profit tied in. So our risk is tied to what we pay for it, and we're only looking to take advantage of a market. That's one of the finer strategies that we would look at for a situation like this, and that's one of the strategies that we've put on for Amazon. And why? Because we were targeting the move back up to 950. So with that said, when you're looking to take a directional play and you want to reduce your cost, sometimes this is like threading the needle, thread through the needle eye. But as you can see, if you're targeting a move up near 950, you have leeway between 940 and 960. So you don't have a lot of risk and you can participate in an upside move. I hope you enjoyed this video, another strategy that we employed here using the Person's methodology. Thank you.